Wow, that was absolutely brutal. $10,000 daily candle. Bitcoin went all the way down to $42,000. Longs were liquidated today. Let's look at the futures liquidations. We know that 417,000 traders, $2.5 billion worth of leverage was finally liquidated. And I guess the big question on everyone's mind is, was this a healthy correction in a bull market, or is this something systemic that we need to worry about? Is this the end of the bull market? Well, that's what we're going to be covering today. We're going to be looking at what caused this correction, whether it is a systematic flaw in the markets, or whether it's just something that happened overnight and is isolated to the crypto industry. And we'll look at whether this should last for a long time. And if it's not a long-lasting bear market, then maybe we should be buying. And today we'll look at some of the buys that I made and some of the buys that Sheldino made. So, Sheldino, are you ready for a big show, my friend?
30% down in my portfolio, brother. Let's do it.
Let's do it. Let's do it. Let's do it.
He's all about the DJ, baby. Crypto man. He's all about the DJ, baby. Uncle Ren's in charge. He's a crypto star. So savvy what he say. Fast money like a sports car. He's all about the DJ life. Make some money, change your wife. Big calls on the altcoins for the bull market hype. He's all about the DJ, baby. Crypto man. 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 Crypto man ran. Crypto banter. You got crypto questions, they got crypto answers. Jean-Claude Van Damme of the Banter fam. Could he kick it? Yes, he can. Can he kick it? Yes, he can. Crypto man ran.
Okay, that was a brutal correction. In fact, $10,000 daily candle on Bitcoin. It was the most brutal day on the Bitcoin market since May this year, when we first flushed out the liquidations. And today we have had another major flush out of liquidations. We had 417,945 traders that were liquidated. $2.59 billion liquidated on the markets. Then we also had Bitcoin dropping by $10,000 on the daily candle. We had the leverage finally coming down, and the question is whether the coming down of the leverage was to normal levels or to acceptable levels, or is it back? Is it open again? We've got fear and greed at 25, and I think it's actually going to be way lower. Actually, I think the fear and greed is actually going to go down, because this measure was taken before the liquidations all started. So a super brutal day on the markets. What happened to Sheldon? Someone should go check on Sheldon. There he is.
Sorry, there was a aircon thing that we needed to get sorted. Had to deal with that quickly.
All right, so that's where we are. We are at fear and greed all the way down to 25. We had a Bitcoin smashing down to $42,000. Today we're going to look at the good, the bad, and the ugly. So, of course, the bad is that this correction came much quicker than we expected, and it came much harder than we expected. What actually caused this correction? Let's take a look at some of the things that caused this correction. There was a whole spate of bad news yesterday. First thing is, we need to look at the markets. There was too much leverage in the market, and that leverage was in the market for too long. You'll recall that Sheldon and I kept saying that the leverage indicator on crypto quant was actually broken. Well, it turns out that the leverage indicator on crypto quant actually wasn't broken, and there was a whole lot of leverage in the market, and the leverage actually wasn't being flushed out. And now, finally, what we saw the leverage being flushed out of the market. Let me show you guys what happened to leverage. That is a chart of the leverage since the 8th of November. The leverage is now went straight down. Let me show you some more. BTC aggregate futures open interest went down by $4.423 billion in the last 24 hours. That's a tweet by Dylan
Wow.
Leclerc. So, but hold on. So the leverage was reduced by $4.423 billion of which $2.5 billion was liquidated. So some people closed their positions voluntarily, about 50%, and the other 50% actually got liquidated. You can see that the open interest plunged. Okay, so that was the Bitcoin futures open interest, and this is what happened in the last 24 hours. Bang, 2.2 billion liquidated in the last 12 hours, and the open interest plunged by 25%. So unbelievably healthy cooling of the market. However, there are some other...
It was very big, though.
It was very big. But Sheldon, yeah. You'll recall that I said a while back, I said, these small dips aren't doing anything to get the leverage out. These small $2,000, $3,000, $4,000 corrections in Bitcoin, they're not doing anything to flush out the leverage. But now there has been a real flush out of leverage, and we can get back to real business. On the other hand, this is not isolated to crypto. This is a much bigger systemic problem that we're having. First of all, we have Evergrande, one of the biggest Chinese property companies in the world, which is highly leveraged. They published this announcement warning that they cannot make good on some of their financial obligations. They say, since September, the group has been diligently reviewing its capital structure, liquidity, condition of its help, of its financial and legal advisors, evaluating all available strategic options, and maintaining ongoing dialogue with offshore creditors. In light of the current liquidity status of the group, there is no guarantee that the group will have sufficient funds to continue to perform its financial obligations. The group is taking a comprehensive view in assessing its overall financial condition, considering the interests of all stakeholders, upholding the principles of fairness and legality, and plans to actively engage with offshore creditors to formulate a viable restructuring plan of the company's offshore indebtedness for the benefit of all stakeholders. As of the date of this announcement, the company received a demand to perform its obligations under a guarantee in the amount of approximately $260 million. In the event that the company is unable to meet its guarantee obligations or certain other financial obligations, it may lead to creditors demanding or acceleration of payments. So Evergrande rearing its ugly head again and potentially defaulting on its debt. Now, you'll remember that this happened a while ago, and they managed to make certain payments, but the biggest payments are actually for now. And what they're saying is that they may actually default. Now, what does a default of Evergrande mean? Well, it means that a lot of banks, a lot of financial institutions, and a lot of individuals, I think to the tune of about $300 billion, will be affected. So this company has about $300 billion worth of leverage at the moment. So not good from that point of view. Then we had the stock market becoming extremely nervous about Omicron. And you'll recall that the stock market was nervous about Omicron because they are worried about supply disruption. So they're worried that people won't go to work and that there will be supply disruptions in the market. And as a result, people won't have anything to buy. So we've got all this money and we just simply won't have anything to buy. That's one of the things that the stock market is nervous about. But then yesterday, towards the end of the day, and I want to show you can kind of see exactly where this happened. It happened yesterday. I'm looking at the 1 hour candle. It happened somewhere around there where you can see that the NASDAQ, which is the US tech futures, took an absolute dive. You can see that 300 points dive in a day. What happened there? Well, this is the Fed. And the Fed came out. Let me just try to find that tweet for you guys. Here we go. So James Bullard from the Fed came out yesterday and said that the Fed may expedite tapering. So the Fed is now realizing that they've got a serious inflation problem. And the Fed, ultimately, what they have to control is their mandate is to look after two things. They look after inflation and they look after unemployment. They're going to make sure that there is low inflation and there is low unemployment. And they came out yesterday after Powell's statements the other day where he realized that inflation is no longer transitory. And they came out and they said, look, we may actually expedite tapering. They may expedite tapering. And they were talking about expediting it to March, April. So what they're really saying is, that they realize that the economy is too heated, that this is causing inflation. that inflation is now out of control. And so what the Fed wants to do is the Fed wants to slow down the economy. How do you slow down the economy? Well, you increase the interest rates. When you increase interest rates, you do two things. One, you increase interest rates. The problem is that when you increase interest rates, you're making money lending more expensive. You're making the cost of capital more expensive. So if you're borrowing to fund a plant or a factory at 1%, it's pretty cheap. But if it starts becoming 3%, then it's not cheap anymore. And so the Fed is going to be increasing interest rates probably, and also slowing down on putting more money into the economy. They're going to start tapering more money in the economy. Then we had another bad thing, and that is that the labor market also went down. Not down, but just not up as quickly as everybody expected. So everybody expected the labor market to be up 550,000 jobs, but the non-farm payrolls actually only went up by 210,000 jobs. Now remember, Bitcoin likes high inflation environments, which is why yesterday when this happened, when the Fed announced they're going to start tapering, it slows down the growth, and it also is going to slow down on the inflation. And I think this is a very calculated move by the Fed. I think what they did a couple of months ago was they said, look, we have no option right now but to print money. We have to print money. That's the only way that we're going to get this economy to succeed. Now, when they realize that inflation is completely rampant and completely out of control, they have to slow things down. How do you slow things down? Well, you increase interest rates, or you stop putting so much money into circulation. And they're kind of saying, look, we think that the economy is now stabilized enough, and what we're going to do is we're going to start increasing interest rates and potentially stabilizing the economy. And yesterday they shocked the market when James Bullard came out, and I think he mentioned something like March or April. So that's also spooked the market. Wow. Yeah, is there anything else that they said here? I think that is pretty much what happened from that point of view. Then Biden has a cold. I mean, I don't know if that's people are worried that Biden maybe has COVID, but I mean, Biden has a cold. Biden has a cold. So
Biden has a cold.
Biden has a cold. So the market got all spooked. So now I guess the big question is whether this is systemic, whether this is going to last for a long period of time, whether this is a healthy shakeout, or whether this is the beginning of a long-term bear market. I mean, one thing that we should be looking at, I mean, the treasury markets kind of saw this happening. And Raoul Paul said, look, there's an imminent slowdown happening. The treasury yields are actually showing that there is actually an imminent slowdown happening. And you can see the treasury yields were starting to increase from a few days ago, or from a few months ago, increasing slowly. So that is where we are. And I guess let's talk about what you just saw in the charts. Let's look at where we came out on the moving averages. And then let's look at a couple of scenarios as to what could happen next.
Yeah, so obviously the big thing in the market is I didn't expect this. I'm not sure you didn't expect it on this, especially, you know, how quickly and how big it actually happened.
Before you carry on, guys, smash the like button and subscribe to the channel. This is a weekend stream. Sheldon and I have taken time off our weekends to be here with you guys to walk you through this. I've got family commitments. I'm supposed to be at a birthday party. Here I am, and we're broadcasting. All we ask you to do is smash the like and subscribe to the channel, because in these unscheduled streams, the only way that we can get the stream out to the public is if you guys like the content. So go ahead, like the content, smash the like, and then we'll obviously keep streaming with you guys every time the market does this. Okay, talk to me, Sheldon. You weren't expecting this. I guess we were expecting Bitcoin to do something.
Exactly.
Something was up.
Exactly. And it does happen. You know what I mean? Just to show you here. So I'm Sheldon the Sniper, and this is my 1, 2, 3, 4, 5, 6, 7, 8, 9th dump that's been big, over 25 to 30% since I've joined in the last 2 years. So it does happen. Remember, what we do is all we can do is chart of what is there. We can never control the news. And now it's time for us to now jump back and say, okay, this has happened now. We've entered the market. I'm down 35%, close to even 40% on my whole portfolio, guys. But I've been 35 to 40% down on my portfolio before, and I've learned not to make rash decisions when something big has already happened. I first want to see what happens next, and then I have some sort of strategy to look at. So what I did was I then jumped into the charts to say, okay, we had our original plan, which was our original trend line, and we wanted to hold that original trend line. And that was just showing us that after this little May dump off that we had, we started recovering and Bitcoin finally broke a higher high. Okay, now when we started that momentum, I wanted us to keep that momentum, to say that if we're going to continue the way 2013 and 2014 was, we need to hold this momentum. Now, something very big happened yesterday. Guys, we are finally at that point where we have broken the cycle of doing the normal cycle that 2013 and 2017 did, where we had, a middle drop in the middle of the year, explosion during December, and then explosion during Jan, and a blow off, and a complete blow off top. By having this drop, we have completely erased that we are now 2021, because the rumor has it, and what we've been following is every 4 years these bull markets, and every one that we have had, especially the last two, have all followed the same cycle, and now we have completely destroyed that. Now, there's two good things from this. Obviously, plan B was running on these things. This is how it was going to run. We were running on these sort of things, and now that gets shaked. Now, what can that mean for us firstly? Guys, that can mean, if following those two previous cycles, we had a 3-year bear cycle in each. Now that we're breaking this, we're finally getting to the point where me and Rand were speaking about in the last, the last few months on that, we've been speaking about, will we ever get a 3-year bear cycle again? And this is a very key indication that finally the market is starting to change. And yes, we're getting this little dip, but now it is open. We are basically in uncharted waters now, because now we have nothing to refer back to. Remember how we always had something to refer back to, and this is how it's going to play out. This is how it's going to work. Now all that we can do is be dedicated to this and to use the correct tools and track as we start to move, and obviously understand where this place is going. So what I did was I then zoomed out from the complete drop. And this was the one that if we were going to get 100K this year, we needed to hold this momentum. We have lost that now. Now, is this still a bull cycle? I then went to the bigger picture and I went back to say, where are we actually in the full cycle? And where we can see is we came down, we did have a higher high in play, and we have come down to my original, this is the main trend line, that we have formed since early last year to the big drop that we had in May. And as I saw, we basically came down and test. Second thing I then looked at was the 200-day moving average. Very big indication for us and what we need to see. And as we can see, is we did drop below it. Currently, it is sitting at around 46,200. We are now sitting at 47, but currently we are holding the 200-day moving average at this point. So that is a bigger sign, because now we want to really zoom out and say, is the next 6 months to a year bear or bull? We then have that to play in there. Then I went back and I had a look at the FUD as well. And what happened with the FUD was we dropped down fully. We then had a bounce on the 0.618, which is the golden zone. So this is showing us where we did bounce is on a normal sort of pullback from a full impulse. It can be a healthy sort of pullback. And then I went into my RSIs, and, we were focusing so much on the daily and that. And I want to show you these two on why I think the cycle is now broken. And I think we're going to be playing it quite differently now over the next year. Is we have this weekly RSI still coming down, and it's showing me, especially after this Sunday, we're going to have a big reset in this, and I think it's going to move this RSI quite far down. But it's showing that during December now, the next 2 weeks, we can have a slowdown market where we can be hovering between 40 to 45, anywhere in that region. But it's showing us that we're not going to have much growth for the remainder of this month. Okay. Now, previous bull cycles, this is where all the growth happened. Last December, this was last December, guys, where it was from here all the way rallied up to here. That was the last December that we had. You can see we're running in a very different way now. Now I run to that and I jump to that and I jump to my monthly. To say, okay, this news that we're getting in the stock market now, speaking to Rand, saying, this can be until January, February next year.
This is not a short-term thing. This is not a short-term stock market recovery. This is the Fed doing things on purpose. They're trying to cool down the markets. They're trying to slow the economy so that they'll have less inflation. That is what the Fed's mission now is, to slow the economy to slow it down. What does that mean? I mean, let's just understand what that means from a fundamental point of view. It means that they are trying to make less money in the economy, which means that everything is going to become cheaper, right? All the prices of everything is going to come down. The days of drowning in money, the days of easy money are now going to start coming to an end. And so what it means is that the cream will rise to the top. It means that if you're holding good assets, you've got nothing to worry about because there's still a lot of money in the economy. But the hype of this money printing is now going to start calming down. And I think what the Fed just wanted to do was they just wanted to prepare the market and say, you're running too far ahead. Now we've got to bring you back. Now we've got to bring you back. And so the Fed has a very cool strategy, because what the strategy is, they don't just do things. They warn you in advance. We are not thinking of raising interest rates. We're not thinking of raising interest rates. We think the economy is starting to overheat. We think tapering may be able to come soon. Tapering is now here. Tapering is going to be here sooner than expected. And so by doing that, what they're doing is they are bringing down the market. They're bringing down the market. They're bringing down the money in circulation. Because remember, a lot of people are making a lot of money on the markets and then spending that money, and that's increasing prices. But if you bring down the markets, then all of a sudden you get a much cooler, much more sustained bull market. I think the Fed is going to stop short of crippling the economy. So the Fed can't afford the market to crash. And I want to just quickly show you something. Let's look at, we can look at the NASDAQ chart, but we should probably look much more at the Dow Jones chart. But let's look at the NASDAQ chart, and let's look at it on a year. Let's look at it on an 18-month cycle. This is what it looks like on an 18-month cycle. Okay, it's unnatural.
Screen there, buddy. Let me just put it on there. There we go.
Okay, this is what it looks like on an 18-month cycle. Now you'll agree with me.
Yeah.
You'll agree with me that that's an unhealthy growth. That is an unhealthy growth.
It looks like a manipulated growth, if I can be honest. It looks like it's a controlled growth.
Which market in the world can go from a low of 6,700 to 15,000 in 18 months? Okay, so you'll say, okay, but don't take the bottom-most point of COVID. Let's take a point somewhere in the middle. 7,500 to 15,700, even after this correction. You're talking about a market that's doubled, a stock market that has doubled in 18 months. But that's unsustainable. So what I think the Fed wants to do is to say, look, this is now getting out of hand. And probably what they're going to want to do is kind of like bring it down here to, so it becomes like a much more sustainable correction, maybe 12,500, 13,000 on the NASDAQ, and then similar on the Dow Jones and whatever else. I think that would stop the inflation problems. What I don't think that the Fed is trying to do is to get the market to crash. I think they just want us to slow down, and they'll just get us to do, just something like that, and then just to hover around here for a while, and then to just maybe continue on a much healthier trajectory. And that will slow down the economy. It will slow down inflation. It will do everything that we need it to do. And I think that the Fed aren't idiots. When they found out about the Omicron variant, they could have delayed their announcement. They're not idiots. But they thought, hold on, this is probably a good opportunity for us to tell. We've got this Omicron, people are nervous. Let's tell the market that we're going to taper as well, because we have to taper. But let's tell the market, and maybe that will slow down this hype and this mania that's going on in stocks, in crypto, in everywhere else. And then we will get a much more sustainable bull market. Remember, there's still all this money in the economy. The money has to go somewhere. And right now, what we've seen is we saw a shift into US dollar, into US dollar. Let me show you a chart. And again, I'm veering out of crypto for a second. Let's look at the DXY, which is the dollar index, which is the DXY is where money is flowing into. So let's look at the DXY over a 1 day. And what you can see is since November, people have started to go back into US dollars. And so the US dollar is starting to increase in value, right? Because more money is going into cash, into US dollars. That's the first chart. Then there were two other charts, which I think are very, very, for us, Sheld, worth talking about. Let's look at them. This has shocked me.
Yeah, me too.
Dominance. 40.97 on Dominance during the biggest correction that we've seen this year. Dominance is on 40.97.
Yeah, it's not normal. So to sort of narrow that down, guys, usually what happens is when we have big dumps off in a market like this, we usually skyrocket with Dominance. They usually care so much about Bitcoin. They flush all Bitcoin into alts, and you can see it's very different this time. I think it's ETH that's holding that.
Well, then that's another chart to look at. That's the ETH BTC chart. This is what happened when Bitcoin collapsed this morning. This is what happened when Bitcoin collapsed this morning. ETH BTC pair went absolutely parabolic.
And it's about to break that cup and handle, bud. That main one that we were talking about, that's the high to break now.
Let's look at it. Maybe show us just.
Yeah. So what's crazy about it is, let's just see if it's here. There we go. Jump to the weekly. So this is the main one. Let's make it bigger, that we've been talking about. So guys, I'm going to jump into the shorter views now and what I'm seeing with the coins now. But, look at this for ETH. This is the main one. This is the one that takes us all the way to the 0.01, as you've been speaking about. So ETH is holding really well. Do you have any idea why we were holding so well to Bitcoin? And because you look at that, and then you look at this, look at that ETH dominance. It's absolutely ripping.
I must say, I woke up this morning, and the first thing I looked at the Bitcoin price, and then the next thing that I looked at was dominance, and I thought my dominance wasn't updating. I kept taking my phone, hitting it down to try and refresh, and it's true. I mean, the dominance is very, very, very strange. I must say, I thought if Bitcoin took a $10,000 daily candle, I thought that dominance would have shot up. It didn't shoot up, which means that people are still believe we're in a bull cycle. People still believe that there is scope for these altcoins.
And I think it is, right? Like the Fed are fine. They're doing something that, would you not say it's better for the longer going run? Because the way the stocks have been running, yeah, but that's exactly it. So, this had to sort of happen, and we know how quickly it can obviously affect Bitcoin, but we also know how quickly how quickly we can react and how quickly we can bounce from these sort of things. Yeah. So all that it's done, and all that I see in my opinion now, is the market's going to slow down. And I'm expecting the crypto market to slow down too. This was a much bigger move on where we're looking at. Now, where we dropped to was obviously tons of support and a lot of key levels. That's why we've got obviously the nice sort of bounce. But what we always had, especially from the previous, was this trend. Now, we know anything that we break, that we are going to go to some point and sort of test. But what I'm looking sort of at with Bitcoin is, a little push up back to the region of the 50K to the 53K, and then a little come down to, back to the 45 level sort of region. And then I think from Jan and from these things, we're going to start getting a slower growth market, and we're going to start then continue. I really think, I was thinking in my head, how are we going to not do the same cycle of what we've done? It is not good if Bitcoin repeated 2017 bull run again, because how are we ever going to get adoption if we keep getting these damn blow off tops and we're not getting gradual healthy growth in the actual market? So I'm actually really happy that we've broken that cycle. We've actually broken that sort of thing. So what I'm saying, guys, firstly, the guys on CoinPanel, this is why it's a big thing. You guys would have been stopped out many times, and now I'm able to help a lot of you on that. There were stop losses on all the coins. It's always important to have.
Can you please show the CoinPanel interface? For those of you who don't have CoinPanel, those are the charts. They're all updated. The stop loss, just show the guys the stop losses on each of the charts.
Yeah, so if we have a look, let it just load up. There we go.
The one before. Maybe just go to the one before. Just go to the one before, because that one had that. Oh, there we go. You got the full trade there.
See, yeah, I got stopped out. We will look for a new entry, and I'll update you. And then you'll see the little icon change when ADA is ready to buy in again. I know we lost 5 or 10% on ADA, but don't worry. We're going to get it cheaper, and I'm going to get in again when it's healthy. So it's a way that I can really help you guys with all of these things.
Guys, if you want this in your pocket, and it's not about getting. There's a referral link in the description. Just go get it, Sheldon, in your pocket, and literally every move that he does, you guys have got it. Every stop loss that he sets, you guys have got it in your pocket the minute he does it. And the minute he makes a trade, it gets flagged. So you'll see on the left-hand side, there are a whole lot of flags.
Yeah. And we got obviously updating the alert system where you get emailed when something's been changed. So guys, remember with this, we do not push the buttons for you. It is going to happen at these times. So you have to learn to put your big boy pants on and to work with us, please. Learn the tools and know how to protect yourself from these things. We can't protect you. They do happen now and then. So what I'm looking at, Ren, I still see us holding a very, very main trend since the thing. I am seeing, you know, the market's probably going to be shut off for the remaining of the day. I'm very surprised. I'm intrigued to see what the stock markets are going to show us on Monday, as we can't see those charts right now. I want to see what reacts there. But I am seeing Bitcoin test 50K, 52K at some point. We're then going to be making some sort of decision. And all that we're going to do, guys, is we're going to have a slower December, and we're going to start off fresh, and we're going to run through things. But I think we're going to have a gradual growth year next year. And I'm happy that we are finally decoupled. I still think crypto is going to be adopted around this world. I still think all the biggest companies in the world, the fundamentals are just too strong. We needed the Fed to finally sort out the stock market. That's always been our biggest concern, is what would make this market tank is a stock market crash. And they need to get their shit together, and then we can have the continuous flow. So right now, guys, I will not be selling my coins right now. I'll be waiting now for retail, for you know, a little push up in the market, and then we'll be making some decisions next week and helping you with the structure of everything.
I want you to listen to this. It was from the All In podcast. Now, I know I've told you guys to listen to the All In podcast. If you're not subscribed to the All In podcast, go and subscribe to the All In podcast on YouTube. It's 4 billionaires, Chamath Palihapitiya, Jason Calacanis, David Sachs, and David Friedberg. And they basically record a conversation that they have once a week as best friends. Now, I want you to hear this part.
The nature of those kinds of features is that it's trying to subsidize
just a second, it's coming
what is otherwise not a clear, simple, viable story at that price. So either change the price or change the company.
Yeah. I will say one important point about what's going on. A lot of people have said this is a crash, and that term's been used a lot. But, because people that have only traded in markets and have a brief history, call it back to the 2000s, the last three major drawdowns have been the .com crash, then the financial crisis, and then the COVID crash. And all of them had true systemic risk that caused there's all these ripple effects and secondary effects. And Chamath, I mean, and for all you guys, it seems to me that this time what's going on is a devaluation that doesn't have systemic risk attached to it. If these
we had this,
I don't know about that.
We had this happen in 2018 because in 2018 it looked like there was going to be inflation. Powell, basically killed the market. He raised rates, and then it turned out he was completely wrong, and China was okay, and everything was fine. And then the market just completely violently snapped back. Again, this is what I'm saying, which is it's too early to tell whether this is just a short-term opportunity for people who have made a lot of money to de-risk. And again, Satya Nadella just sold 300 million of stock.
Elon has sold half his position. It was half of his position. Yeah, I mean that to me was significant.
Elon Musk sold 10 billion. I've sold almost I think $600 or $700 million worth of stuff this year. Like, this is what I think smart market participants do. You don't just wait and just try to mark to market the last tick.
Sachs, you think there is systemic risk in here?
Yeah, I mean, look, first of all, what's going on here? I mean, Chamath is right that over the last 4 weeks, we've seen a 30 to 50% decline in these tech growth stocks. What is the reason for that? Interest rate expectations driven by inflation. For the first 6 months of the year, all you heard out of Washington, the administration, was this inflation was transitory. That story is basically that collapsed because now people can see that as persistent. They're now pricing in the risk of interest rate increases.
Oh, Sachs, you're breaking up.
He's done. He's toast.
He's done.
Okay,
He's toast.
That's what basically what they're saying. It's the thesis that I said, that the Fed is starting to slow things down because they have to, because of inflation. They're doing it through increasing rates. They're going to also do it through money tapering. But then he mentioned that you're getting billionaires who were selling stock. Now, I don't know if you remember, but we spoke about this last time, where I said to you guys, we're seeing billionaires selling stock because we said, I spoke about Jeff Bezos, I spoke about Elon Musk. You're seeing a whole lot of billionaires sell stock in their own company because they think that the market is completely overvalued and in a bubble. Now, when these people generally do that, it means that they know something that you don't know. They're seeing something that you don't know. That's the next thing. There is also another sign on the wall where there are CEOs resigning. And I said this to you yesterday or the day before on the stream, and I said, the market looks like it's going to come down when the CEOs start to resign. And the reason why CEOs start to resign is because they say, look, if I resign now, I resign at the highest stock price ever. And there's no real upside for them in terms of staying, because if they stay, then the market comes down and they say, okay, well, your stock price was 100, your stock price went to 50, and what you get remembered for is being the CEO where the company valuation fell to 50%. And so I did some digging, and I found this article that says the Great Resignation hits the top spot. And so what you're getting is these CEOs that are starting to resign from their roles. US-based companies saw 142 CEO changes. I'm going to just find why CEO leaving, some of them for retirement. There's some other ones that I want to show you. Just give me 1 sec. There's an excerpt here that I really want to read to you guys. Let me just find it for you guys. Anyway, long story short, what this is about is we're seeing the highest CEO turnover, the highest CEO resignations since for a long time. The last time we saw this was, I think, before COVID. So I think I had an article here somewhere, which is before COVID. We had this great resignation of a whole lot of CEOs. I think the Nestle CEO resigned and a whole lot of other CEOs resigned. So what they're saying is, look, we believe the market's in a bubble. There's no real upside for us staying here, and therefore we are going to jump the ship. That's the first thing I wanted to show you. I also wanted to just quickly see where we are now after the whole correction that's happened. Here we go. Sorry, I didn't show you that. This is the article that showed the 2021 CEO turnover report. This is the tweet that says the Walmart CEO resigned, the Twitter CEO resigned, the Facebook crypto exec resigning. So there are mass resignations in these big companies. Let me show you something else. Let's take stock of where we are after the market plunge, because I think that's very important. So first of all, we have had a futures flash out. Bang, gone. Who bought the futures flash out? You'll be surprised. Actually, the people that bought were the Americans, the Coinbase premium, and the Koreans. Okay, so what happens is when there are no Bitcoin in a certain country, then there becomes a premium. And I'll show you what happened in a second. Exchanges net flow stabilized, and miners haven't sold a single coin. So that's what it is. Let's look at it. So huge futures flash out by the market. It finally happened. Let's actually try and go to the live chart here. Let's go to the live chart and check the live chart of what happened with the futures washout. Let's quickly see. Okay, so that's the futures flash out. That is that is what I wanted to see. That is what I wanted to see. But look, hold on. We're still not where we need to be. We're still
No.
Look, in May, we were between 0.9 and 0.12. Okay? We are still at 0.18. Okay, we're still 33% higher in leverage than we were in May. Now, yes, there is a new market structure. We do have Bitcoin futures ETFs in the market, which increase the leverage of the market, right? But right now, if you look at where we are, something has happened in the futures market, which is amazing. Then let's look at the next thing. The Coinbase premium and the Korean premium spiked. This is a fascinating chart, because this is what you call the buy the dip by country spike. That is the Coinbase Bitcoin index. It went up to, I think that 20%. I think it was about 20%. That is the ETH spike, Coinbase. This is the Korean premium index. Look at what happened to the Korean premium index. So during today's decline, the premium of Coinbase and ETH soared, indicating that American investors showed strong buying in addition to the premium indexes of BTC and ETH in South Korea. So
someone's buying these dips, right?
Retail users in America and Korea buying the dip. Next, let's look at exchange net flows. So exchange net flows is money flowing onto exchanges. And let's look at the exchange net flows, stabilized. Look at what happened to Bitcoin from the decline and watching the net flow indicator over the past hours. We note that the stability is clear, which means that the whales is not accelerating the trend in terms of selling. So whales are not selling their coins right now. That's another positive sign that some calm is back into the market. Miners are not selling. Miners usually sell into bear markets. Miners are not selling. Miners are continuing to buy. Okay, so that's where we are when it comes to the miners. So it looks like there is calm on the markets for now. And yeah, I don't think that we're going to have another $10,000 candle. I think that the worst is over. I think that a lot of the leverage is out the market. Maybe not all the leverage is out the market, but a lot of the leverage is out the market. I think the rest of the leverage will flush itself out slowly. So this is what we needed. We needed a $10,000 candle to get the leverage out the market. That's what we needed.
Yeah, yeah. And so what comes from it now is obviously, is anything else there?
No, I think that's it. Let me just have a look at that's it. Here, let me just see if we can. Yeah, I mean, that's the leverage. That's the leverage. Look at that.
Wow, wow. Yeah, you know, maybe there's possibly a little bit more to go because, like I said, I always believe in people revenge trade after this. So I think that the leverage is going to go up a little bit again, and then there's going to be some sort of flashing again. But what do we do now? We have three sets of groups. We have the guys that started with us in the beginning of the year that have been through this. And I can see how calm they are. They are completely calm because we have been through this. We went through a way worse one the last 3 months. We then have guys who bought the top. And then we have guys that wanting to know, do we buy now? Now, the biggest thing that I want to say to all three is wait. We need to see what happens through by Monday, by Tuesday.
Yeah. Well, hold on. No. Slow down. Slow down.
Yes.
Slow down.
Yes, yes,
slow
yes,
down.
yes.
Let's look at what happened first. There was a massive correction overnight in the market. Massive correction.
No, come on. That's not right.
No, it is. ThoughtChain. I was watching this. ThougChain went to $1 on Kucoin.
No way.
$1.38 on Kucoin. There were a lot of these. There were a lot of these. Let me show you something. BTC on Kucoin.
Liquidations, brother. Liquidations.
Yeah, liquidations. There were lots of these on. Yeah, let me show you another one. Credo on Kucoin. There's another one.
Wow.
There's another one of those red candles. There was panic in the market. And when there was panic in the market, it was a great time to be buying. And in fact, I think if you're a long-term holder, this is a great time to be accumulating. This is a great time to be dollar cost.
Dollar costing. Yeah, dollar cost, exactly.
So what I said was, I don't think that this mess is over. In fact, I think this mess is going to be a long-term. Not long-term, but not when I say long-term, certainly this isn't getting flashed out this week. So what I did was I actually posted for you guys on my Twitter, and I'm going to keep posting on my Twitter every time I deploy. And I want to show you what I posted, and I want to show you why I did what I did. So it's important that you understand. So when that dip happened, I was watching that dip happen live, and then I quickly, it happened so fast that I said, guys, deploy now. I couldn't even type because I was trying to execute trades and type and get Twitter onto the account. I deployed about 30% of my cash, and I deployed it into Trader Joe. And I'll show you why I did this. I'm underexposed to the Avalanche ecosystem, and I've had a wish list. And I said, look, if ever there is an opportunity, these are the things that I need more of. Okay, so I deployed a little bit, 30% of my cash. I deployed into Trader Joe. I deployed into AGLD because I said that I wanted to have some exposure to the Loot project. Credo, I dollar cost averaged. Rune, I managed to get it at 7.6. Moonriver, because I am underexposed to the Kusama and Moonriver ecosystem. And SFI at $320. And now I wait because I've got what I need. And now I wait and I look for direction. And when I say look for direction, I don't mean 24 hours. I don't mean 48 hours. I mean, I just wait. Let's see where this market goes. Let's see whether this is a long-term systemic thing or whether this sorts itself out in a week or two. So I'm dollar cost averaging very, very, very slowly. I tried to catch this. I tried to catch these candles this morning. And there were lots of them. Everywhere that I looked, we had these massive red candles. But the problem is, as you can see, they were quick. They were like down and it was straight back up. It was because of all the liquidations happening on all the exchanges. So there is a strategy to be spoken about here, and that is if you do want to buy something, like I wanted to buy more Rune, I'm underexposed to Rune, I'm underexposed to the Avalanche ecosystem, and you are trading on a centralized exchange, then put in stupid orders. I mean, you know, you could have put in an order on Rune. Okay, so let's just look at that. You could have put in an order on Rune. I'm quickly going to go to the Kucoin account, yeah?
And that's a nice little hint, right? Because we made these lows and it was so quick, guys, at sometimes the price does come back to those sort of levels at different points. So I agree. Okay, I don't think Rune's going to go back to $1. But,
no, but hold on. There's a lesson to be learned here. Nothing stops you from putting in an order for Rune at $4 or $3. Nothing stops you. And so what happens is you put it there and you forget about it. And if there is another flash crash or a liquidation while you're sleeping, you can pick up Rune at $2. So you lose nothing by putting the order there. So I always say, like, put in some cheeky orders. Yeah. Worst case, you get hit. I mean, best case, you get hit. Worst case, you don't get hit. But put in cheeky orders, because when there is high leverage in the system, there's going to be high liquidations. And when there's high liquidations, these things can go down to I mean, Rune went down to $1.34. And it was everything. Look, let me show you another one. I think I saw this on Cardano too, actually, because I was trying to buy it today on Kucoin.
Yeah, but I think dollar costing is the perfect strategy now, because we don't know. We're going to have to see more candle prints, see if we're going lower, or is that the temporary bounce they're safe. So dollar costing is the best. Things aren't special. Massive specials out there. Deploy a tiny bit of cash now, and we will look every day and see how we start projecting that. It's the best strategy to do for now. But don't be scared. Don't be scared that, like, I'm still very confident that crypto in the next year, 2 years is going to be absolutely insane. Like, you know, we've been through this, and all that I'm going to start doing, Rand, if you don't mind, is I'm just going to start teaching a little bit more while we wait for these flows to go. And I'm going to be getting that, because now I know everyone's got everyone's attention. So now I can teach you along these things, just so that next time you are a bit more leveled up and you're a bit more skilled. That's it.
So guys, we're dollar cost averaging. We're doing it super, super, super slowly. We're leaving in some cheeky bids that if they get hit, best day of our lives. Next thing, there's going to be a shakeout now, and the quality will rise to the top and the rest will die, which means that if you are holding shit, if you're holding stuff because you got caught up in the hype, you got caught up in the IDO hype or whatever else, and you don't think that these things are going to be around long term, wait a little bit and look for an opportunity to switch that into quality. And there's a good reason why I say now is a great time to do it. Because even though you think you're getting out at a very big loss, because the quality also went down, it means that it's not such a big loss, because both of them went down. Maybe the quality went down slightly less. So wait a little bit, wait for a relief rally, and then get all your shit into good tokens that will actually survive a bear market. Now, I know that, you know, in the bull market, it's easy to get carried away. I mean, I must admit, I did put through a few trades last week just because I just
I mean, so many shit coins, and now today my portfolio looks like crap.
Yeah, you see, well, so that's what you want to do is you want to take those shit coins and you want to put them into good stuff. So, few things. One is cheeky bids. 2, please do not panic sell today. Do not panic sell today. I know it feels like it's the end of the world. I know it's red, but historically, every time that if you panic sell in these parts of the cycle, you're going to regret it in 2 days or 3 days when there's a relief bounce. And usually there is always a relief bounce. So do not panic sell.
Don't leverage trade.
Don't leverage trade. I wouldn't be leverage trading in this market, that's for sure. Third thing is dollar cost average, but dollar cost average into good stuff only. My recommendation to you is to switch off your computer and to go and write down a list of things that you want in your portfolio, and base that on what your portfolio currently looks like versus what you want your portfolio to look like in a year. Like, I know that I'm very underweight the Avalanche ecosystem, so my wish list is very much on Avalanche. So, and the Avalanche ecosystem. I know that I'm very underweight Solana ecosystem, so I'm going to start buying a lot of the Solana stuff. I know that my portfolio is very underweight Rune, so now I'm going to start looking at buying Rune and Rune-related projects. That doesn't mean that that's the best approach for your own portfolio. You need to look at your portfolio holistically and decide where you want to be in a year from now, and then use the dips to buy the things that you don't have in your portfolio. And that's why today I went quite big on Trader Joe, because I don't have enough Avalanche ecosystem in my portfolio. Another trick that I want to show you guys. Go to your portfolios on CoinGecko. And I know this is like, you know, I usually don't want to open my portfolio on days like this, but let's open it. I'll try and not vomit when I see how much has gone down. Then sort it by the biggest movers in the last 24 hours. And you can see the ones that are down the most. So like Step Finance might actually be a good buy for me, because in my portfolio, that's an amazing, that's somewhere where I don't have enough. I'm trying to accumulate. It doesn't mean it's the right thing for you to buy, because you've got to make sure that you're building a portfolio around all your things. And so sort it from the ones that have fallen the most, because that's where you're going to find the biggest bargains. And then ask yourself the question as to whether these things are real quality or whether you're fooling yourself because they were just more expensive last week. Remember that just because something was more expensive last week, doesn't mean it was good. It was overpriced or good, or that now it's underpriced. Mm-hmm. I do want to talk about one more thing, which is wow. All I can say is wow.
Yeah.
There's actually two things. There's three things that shocked me this morning. The first thing that shocked me this morning was this BTC Dominance.
Yeah.
I was shocked. Yeah. I was shocked.
Me too.
The second thing that shocked me is this. I have to find this for you.
UST, USD.
UST to USD. The UST to USD kept the peg. You understand that this is the stress test for UST. The stress test for UST is whether or not it would lose its peg to the US dollar in times of panic. The peg was perfectly maintained. Even on the 3-minute chart.
Wow.
Even on the 3-minute chart, the peg was perfectly maintained the whole day. Okay, what that means is that people are trusting UST as a store of value, which is the ultimate test for Luna. The big risk around Luna is, will UST lose its peg when people panic? When people panic, will they say, oh, hold on a second, this is a lot of garbage. We don't trust a senior-rich coin because it's not backed by anything. Luna worked perfectly. It didn't lose the peg. So with that in mind, let's look at the Luna price. Let's see what happened to Luna. Okay, down 9%. No panic.
What's up with Kucoin? Why has Kucoin got all of these flipping
liquidations?
Long ass, geez,
liquidations.
$50.
Liquidations.
That's insane. Okay.
That is why you got to put cheeky offers in. That's why you got to put cheeky offers in. Okay, so that is the one thing which is amazing. This is a further endorsement around the Luna ecosystem, is that UST actually kept its peg. It's the ultimate test, and I think Luna passed the test. And for me, this should actually drive Luna up. We should also look at Kujira and the liquidation and the how many people managed to get cheap liquidations on Kujira, which is probably insane. The other thing which has blown my mind today is this. If you look at the Fantom price, let me show you the Fantom price. $1.50. $1. In fact, let me make it very simple for you. You know that Tomb is supposed to be pegged to Fantom 1-to-1, right? But it's not backed by Fantom. It's just artificially, algorithmically backed by Fantom. Okay?
Okay.
It was trading at a premium of 125. It's still at a premium of 117. So it did not lose its peg.
Oh, wow.
This is another example of a senior rich coin, a coin that's not backed by actual money, by actual tokens, keeping its peg.
Wow, this is great.
Which is amazing news for both these ecosystems.
Brings a lot of trust. That's great.
Insane.
Try get some rest, guys. Relax. Monday again, we start again. We've been through it, and it's the battle we fight.
Yeah. Okay. My suggestion to you guys. First of all, don't panic sell. Don't panic sell. Don't sell on the red. If you're selling today, you're making an absolute mistake. I don't care what you're holding. If you're selling it today is a day for buying, not a day for selling. You can buy, but if you're going to deploy money into your portfolio, 30% of your money maximum, and only in the best long-term things. How do you determine the long-term things? Step away from your computer, draw a plan of what you want your portfolio to look like by ecosystem in the next 12 months, and then fill in the gaps from what you have to what you need. Do not mess around with leverage at this time. Do not touch leverage. Don't touch leverage ever, but certainly don't touch leverage this time. Follow me on Twitter. Follow Sheldon on Twitter because we're going to be doing a lot of updates. Get onto CoinPanel because if there are any trades, Sheldon will update them on CoinPanel. And then tune in on Monday. Or if something happens, we'll be again tomorrow. Making sure that you guys are okay. Making sure that you survive the bull market and the bear market with us. And guys, we've seen this before.
We're always here though, Ran.
We will help you.
Through this, through that, we're here.
We will help you trade out of this. This is not the end of crypto. Everything is going to be fine. We've seen this before. We are going to help you trade out of this. So we'll see you guys again tomorrow or Monday. Until then, just chill, my friends.
Got your back.
Yo.
Yo, brother. What a red day. Wow.
Yeah, but I mean, come on.
Jeez, it's crazy how we...
Great buying opportunities.
And we still don't know.
I'm going to take a big look now at the market. I think there's some great opportunities, but slowly. You have to go slowly.
Exactly.
Yeah, slowly, because you don't know. I mean, the stock market is going to open on the futures are going to open tomorrow night late, and that's going to be, it's going to be crunch time. I think there's going to be some volatility in those futures tomorrow.